Every trader wants to turn small wins into big ones. It's almost instinctive, the desire to multiply success, to accelerate growth, to prove that what we're doing is working. But the truth is, most traders sabotage that process because they don't understand the psychology behind compounding. They think compounding happens in the account, when in reality it begins in the mind. The market doesn't reward impatience, it rewards structure, discipline, and emotional balance. Every small win you take is not just money earned, it's data gathered, confidence built, and a pattern reinforced. The small win is not the end goal, it's a rehearsal for how you'll handle success when it grows larger, because if you can't emotionally manage a $100 win, how can you expect to manage a $10,000 one? Think about this. Every trade you take carries more than a financial outcome. It carries a psychological message. Each win, each loss, is feedback about who you are in the market. Small wins teach you how to stay consistent, how to stay detached, how to stay aligned with your edge. Big wins only amplify what already exists inside you. If you are undisciplined, a big win fuels overconfidence. If you are grounded, it reinforces trust in your process. Turning small wins into big ones isn't about finding a new strategy. It's about reinforcing the one that already works. It's about repetition without boredom, execution without hesitation, and growth without emotional volatility. When you can execute your edge flawlessly on a small scale, scaling up becomes inevitable. Most traders think they need more capital to succeed. What they truly need is more certainty in themselves. The market mirrors belief, nothing more, nothing less. Your small wins are the evidence of progress, but they are also a test. Can you keep doing the right thing even when the reward feels small? Because that's where transformation begins. Every time you take a small profit, your subconscious mind records that behavior as safety. It tells your brain, I can win without fear. I can follow my plan without doubt. That internal certainty is what compounds. Money doesn't multiply until belief does. So, the real strategy to turn small wins into big ones is simple. Trade to reinforce your identity, not your ego. You are not trying to prove something to the market, you are practicing consistency until it becomes your personality. The trader who can execute small wins with total emotional neutrality is already wealthy and disciplined, and that wealth always precedes financial abundance. When you stop chasing the next big win, when you stop needing validation from every result, something powerful happens. You align with the flow of the market. You start operating from a place of calm confidence instead of emotional chaos. You stop reacting and you start responding. In that space, small wins compound naturally, not because you force them to, but because you've become the kind of person who attracts bigger outcomes through stability, not struggle. Success in trading doesn't come from extraordinary trades. It comes from ordinary trades done with extraordinary consistency. Every small win is a brick in the foundation of a mindset built to last. Consistency is the bridge between small wins and big success. Most traders underestimate that truth because they're chasing the next opportunity, the next breakthrough, or the next large payout. They believe success in the market is about strategy, timing, or information. But it's not. It's about behavior. It's about how you show up. Trade after trade, day after day, win after win, loss after loss, with a stable mindset that doesn't change with the outcome. Consistency is the invisible architecture of all long-term success. It's what transforms randomness into rhythm, uncertainty into opportunity, and chaos into clarity. The market doesn't need to be conquered, it needs to be understood. And understanding doesn't come from occasional insight or one lucky trade. It comes from repetition, from doing the right thing over and over again until it becomes second nature. Most traders are obsessed with the result of their last trade. They allow the market to dictate their emotional state, their confidence, and even their sense of identity. But consistency flips that equation. It's not about what the market gives you, it's about what you bring to the market. Consistency is the commitment to trade your plan regardless of outcome, because you trust your edge, your process, and yourself. Every small win is a seed. It's not there to satisfy your ego, it's there to teach you how to grow. The moment you start treating small wins as insignificant, you've already set yourself up for inconsistency. The trader who celebrates small wins, not because of the profit, but because they followed the plan, understands the deeper truth. Success is not built in big moments, it's accumulated in small, deliberate acts of discipline. Consistency is not about being perfect, it's about being predictable to yourself. It's the ability to act in alignment with your rules, even when everything inside you wants to break them. When fear rises, when greed whispers, when impatience screams, you stay steady. That's consistency. That's mastery. Think of consistency as emotional control expressed through action. It's not suppressing your emotions. It's allowing them to exist without letting them decide. When you can feel fear but still execute. When you can feel excitement but still manage risk. When you can feel disappointment but still follow your process. That's when you've crossed the bridge. That's when small wins start transforming into something bigger, not because your system changed, but because you did. The irony is that most traders already have enough knowledge to succeed. They've read the books, studied the charts, learned the setups. But knowledge without emotional consistency is useless. Consistency is the filter that turns potential into performance. Without it, every good idea is sabotaged by impatience or fear. The reason consistency feels difficult is because it requires surrender. You must surrender the illusion of control, the need for immediate gratification, and the obsession with being right. You have to detach from outcomes and attach yourself to process. That's a shift very few traders ever make. But those who do find that trading stops being an emotional roller coaster and becomes a rhythm of calm execution. The market will always fluctuate. Prices will move unpredictably. Trends will form and fade. News will surprise you. But the one constant that must never waver is your internal state. Consistency means you are no longer reacting to the market. You are responding to it with awareness and control. It's no longer about predicting what happens next. It's about managing yourself regardless of what happens. There's a profound transformation that occurs when a trader becomes consistent. You stop identifying with your wins and losses, and you start identifying with your behavior. You realize that the outcome of a single trade is meaningless in the context of 1,000 trades. What matters is that every single trade reflects the same level of clarity, preparation, and discipline. When that becomes your standard, you enter a different league of performance. Consistency isn't glamorous. It's not loud. It doesn't come with adrenaline or drama. It's quiet, steady, and unshakable. It's the trader sitting in front of the screen, patiently waiting for their setup, unmoved by noise. It's the calm execution of a plan when everyone else is panicking or chasing. It's the ability to say no to temptation because you trust the long game more than the short-term thrill. Every consistent action you take rewires your subconscious relationship with uncertainty. The market is a reflection of probabilities, not guarantees. Consistency teaches your mind to thrive within that framework. It helps you become comfortable with not knowing, confident without certainty, and focused without fear. That's the mindset that allows small wins to multiply over time. Small wins are the proof that your edge works, but consistency is what allows that edge to express itself fully. You could have the most profitable system in the world, but without the discipline to apply it the same way, every time, it means nothing. The trader who executes a simple plan consistently will always outperform the one who jumps between systems chasing perfection. Inconsistency is the silent killer of trading performance. It shows up as hesitation, overtrading, revenge trading, or emotional fatigue. It disguises itself as flexibility or intuition, but it's really fear wearing a mask. Consistency eliminates that confusion by creating structure. It gives your mind something to rely on. The more consistent your process, the less emotional your decisions become. When you are consistent, every trade feels the same. The outcome doesn't matter. A win doesn't make you euphoric. A loss doesn't make you defeated. You begin to operate with an internal equilibrium that few ever achieve. That emotional neutrality is not a lack of passion. It's the highest form of control. You've stopped trading your emotions and you've started trading your plan. Consistency also compounds in a way most traders underestimate. The effects of one disciplined decision don't end with that trade, they ripple forward. Each time you follow your plan, you reinforce a neural pathway that makes it easier to do so again. Over weeks, months, and years, this becomes automatic. You've literally trained your mind to respond with discipline instead of emotion. That's how small wins evolve into long-term success. When traders talk about compounding, they think about numbers, but real compounding happens inside your mindset. Consistency compounds belief, belief compounds confidence, and confidence compounds execution. Eventually, that internal compounding manifests as exponential financial growth. The account balance is simply the outer reflection of the inner foundation. The truth is, consistency doesn't eliminate uncertainty. It allows you to thrive within it. It's not about knowing what will happen next. It's about knowing how you'll respond no matter what happens. That's freedom. When you reach that state, you're no longer trying to control the market. You're controlling yourself. And that's the only control that ever truly matters. Consistency builds trust. And that trust is not in the market, it's in yourself. Once you trust yourself, fear disappears. You stop second-guessing, you stop chasing, you stop sabotaging. You know that even if the next few trades don't work out, you'll still be fine, because your process is intact. That's the mindset of a professional. That's the foundation of big success. There's a powerful paradox here. When you stop focusing on big wins, they start appearing naturally. When you stop chasing growth, it begins to accelerate. Because you've shifted your energy from the external to the internal, you're no longer seeking validation from outcomes, you're creating consistency from within. And that consistency becomes magnetic. Every successful trader eventually realizes that the market is just a mirror. It reflects your beliefs, your habits, your emotional state. Consistency transforms that reflection. Instead of chaos, you begin to see order. Instead of fear, you begin to see opportunity. Instead of doubt, you begin to see confidence. The market hasn't changed. You have consistency as the bridge because it connects two worlds, the world of effort and the world of outcome. One side is filled with uncertainty, volatility, and noise. The other side is filled with stability, confidence, and growth. You can't jump that gap in a single leap. You build your bridge one disciplined decision at a time. When you truly grasp that, trading stops being a performance and becomes a practice. Each session is no longer a test. It's a continuation of your development. Each trade becomes an expression of self-mastery. You no longer seek the next high, you seek alignment. And from that alignment, small wins start compounding effortlessly. In the end, consistency isn't just a trading skill, it's a life skill. It's the realization that success doesn't require brilliance or perfection. It requires persistence and emotional balance. It's about showing up with clarity even when you don't feel like it. It's about doing the small things so well that the big things take care of themselves. If you can maintain that state, if you can trade, think, and act consistently in the face of uncertainty, then small wins will inevitably evolve into big success. Not because you forced it, but because you became the kind of person who no longer needs luck to succeed. Consistency is the bridge. Walk it long enough, and you'll discover that the other side isn't just about wealth, it's about freedom. Confidence compounds faster than capital. Every trader wants to grow their account, but few realize that the true engine of growth doesn't sit in the balance column. It lives in the space between your thoughts and your actions. Confidence isn't a byproduct of success. It's the foundation of it. The faster you build it, the faster your results begin to mirror it. Because capital without confidence evaporates, but confidence without capital eventually attracts more of it. The market is a mirror, and what it reflects back to you depends on what you project into it. Most traders enter a trade hoping to win. Confident traders enter expecting to execute. There's a difference. One is emotionally fragile, the other is mentally grounded. The trader who hopes is constantly negotiating with the market, begging it for validation. The trader who trusts their process doesn't need validation, because confidence is already the payoff. Confidence isn't arrogance. It's not believing that every trade will win. It's believing that every trade, win or lose, is part of a consistent edge. It's knowing that your system, your discipline, and your mindset can handle any sequence of outcomes. Confidence is the quiet voice that says, I'll be fine no matter what this trade does. That certainty is magnetic. It changes the way you respond, the way you size positions, the way you interpret the market. Confidence compounds faster than capital because it frees you from hesitation. Every time you hesitate, you break the rhythm of execution. You introduce inconsistency, which leads to doubt, which leads to fear. But when you act with confidence, you keep the flow intact. You create momentum, not just financially, but psychologically. Confidence allows you to build emotional equity, the kind that multiplies faster than money ever could. The irony is that most traders try to earn confidence from outcomes. They say, once I start winning, I'll feel more confident. But that's backwards. You don't wait for results to feel certain. You create certainty to produce results. Confidence is built through repetition, through following your plan regardless of the market's feedback. Every time you stick to your rules, even after a loss, you're reinforcing self-trust. That trust becomes the compound interest of trading psychology. Each trade is an opportunity to make a deposit into your confidence account. When you execute your plan with discipline, even if the trade ends in a loss, you've made a psychological profit. You've told your subconscious, I can trust myself under pressure. That's what separates consistent traders from emotional ones. The consistent trader measures success not by the outcome, but by the quality of their decision. Over time, those deposits of self-trust begin to compound into an unshakable belief system. Confidence isn't built overnight. It's built through friction, through testing, through discomfort. It's built by surviving mistakes, learning from them, and coming back stronger. Every time you recover from a drawdown, you strengthen your internal foundation. Every time you resist the urge to revenge trade, you reclaim control. Every time you accept a loss without losing focus, you build the muscle of resilience. That's how confidence grows. Through repetition of composure, money follows mindset. Always. You can double your capital, but if you haven't developed the psychological strength to handle it, you'll lose it just as quickly. The market has a way of exposing your weaknesses. The moment your capital increases, without confidence, size amplifies fear. You start second-guessing, tightening stops, hesitating on entries. You trade not to win, but to avoid losing. That mindset is poison. It kills growth before it begins. But with confidence, size becomes just another variable. You stop seeing a larger position as a threat and start viewing it as a reflection of your preparation. You trust your edge enough to scale it. That's why confidence compounds faster than capital, because it's what allows capital to grow sustainably. Without it, growth is luck. With it, growth becomes inevitable. Confidence doesn't come from being right, it comes from handling being wrong. Every trader will lose. Every trader will face uncertainty. The difference lies in how you interpret those moments. If you view a loss as failure, your confidence shrinks. If you view it as feedback, your confidence expands. The confident trader doesn't attach their self-worth to outcomes, they attach it to execution. Their belief system isn't built on results, it's built on integrity. When you begin to trade with real confidence, your entire relationship with the market shifts. You stop needing the market to make you feel good. You stop needing the next trade to erase the last loss. You begin to operate from internal validation instead of external approval. That's freedom. The market no longer controls your emotions. You control your responses, and that control is what compounds faster than any rate of return, because it's exponential. Each moment of confidence reinforces the next. Each disciplined decision strengthens the neural pathways of trust. You begin to enter trades more fluidly, manage risk more naturally, and exit with clarity instead of chaos. The more confident you become, the smoother the execution. The smoother the execution, the better the results. The better the results, the deeper the confidence. It's a self-reinforcing loop of growth. Confidence also compounds through patience. The confident trader doesn't rush opportunities, they let opportunities come to them. They understand that their edge doesn't exist in every candle or every setup. It exists only under specific conditions. The insecure trader feels the need to force trades to prove something. The confident trader knows that doing nothing is a strategy in itself. Every time you choose discipline over impulse, you're adding to your confidence account. You can't fake confidence in the market. The market will expose pretenders instantly. Forced confidence, built on recent wins or temporary highs, collapses under pressure. True confidence is quiet. It doesn't need to show off. It's not found in words, but in consistent actions. It's not visible in moments of comfort, but in moments of chaos. There's a certain calm that comes with real confidence. You no longer need to predict. You just need to participate. You no longer need to be right. You just need to be prepared. You don't chase profit, you allow it to flow naturally from disciplined repetition. This calm doesn't come from knowing what will happen next, it comes from knowing that whatever happens, you'll be fine. Confidence is also contagious, to yourself. Each moment of composure reminds your subconscious that you can handle uncertainty. Each successful execution reinforces the belief that you're in control of your process. Slowly, your brain begins to default to trust instead of fear, patience instead of panic. The more you act confidently, the more confident you become. This internal feedback loop grows stronger than any trading signal you'll ever find. The greatest traders don't build confidence by winning all the time. They build it by losing well. Every loss is a test of emotional integrity. Do you overreact or do you analyze? Do you blame the market or do you adjust your plan? Each decision either strengthens or weakens your internal foundation. The trader who can lose without emotional collapse has already won the game of longevity. When you operate from a place of true confidence, you begin to see the market differently. Patterns become clearer, noise becomes irrelevant, and your decision-making becomes cleaner. You're no longer seduced by randomness or distracted by uncertainty. You start to see structure where others see chaos. That clarity doesn't come from analysis. It comes from inner certainty. Confidence is what allows you to expand without breaking. It gives you the courage to size up, to adapt, to evolve, without letting fear corrupt your judgment. The difference between scaling your strategy and sabotaging it. Confidence allows growth to feel natural instead of forced. That's why it compounds faster. It feeds on itself through continuous reinforcement. Most traders look for compounding in numbers, 1%, 2%, 5% returns. But real compounding begins when you start stacking trust, patience, and execution. The account balance follows the belief balance. If you're emotionally unstable, your capital will always mirror that volatility. If you're mentally grounded, your account will eventually reflect that calm. There's a point every consistent trader reaches where the market stops being a threat. It becomes a partner. You stop seeing it as an adversary and start seeing it as a reflection of your inner state. Confidence turns trading into a conversation rather than a confrontation. You're no longer trying to outsmart the market. You're aligning with it. When that happens, trading becomes effortless. Not easy, but effortless. Your actions flow naturally because they're grounded in certainty. You no longer wrestle with doubt every time you click the button. You trust your rules. You trust your intuition because it's trained, not emotional. You trust yourself. And when you trust yourself, the market starts trusting you too, because it rewards stability. It rewards the trader who's not attached to the outcome, who's not desperate for validation, who executes with quiet certainty. Confidence turns randomness into rhythm, and rhythm turns opportunity into consistency. That's why confidence compounds faster than capital. Capital grows linearly, confidence grows exponentially. Each correct mental response multiplies your ability to act rationally under pressure. That emotional consistency becomes your true edge, the one no indicator can replicate. When you reach that state, your focus shifts from trying to make money to trying to make the right decision. You stop thinking in terms of trades and start thinking in terms of probabilities. You stop needing results to feel secure. You bring security to the results. In the end, confidence is the currency that buys freedom. When you have it, you no longer fear losing. You no longer crave winning. You're simply expressing your edge through disciplined action. And that's when the market begins to flow in your favor. Not because it's changed, but because your energy has confidence is invisible, but its effects are undeniable. It's the spark that ignites consistency, the engine that powers discipline, and the magnet that attracts opportunity. It grows faster than money because it operates beyond numbers. It operates in belief, and belief is limitless. When you focus on building that belief one trade at a time, one decision at a time, something incredible happens. Your results begin to accelerate without effort. You start compounding certainty, clarity, and composure. And when those three align, capital follows automatically. Confidence compounds faster than capital. Because once you master your mind, your money has no choice but to catch up. Growth happens when you stop measuring and start mastering. Most traders spend their entire journey trapped in a cycle of measurement, counting wins, tracking losses, comparing accounts, chasing numbers. They obsess over the outcome but overlook the process that creates it. They measure their progress in dollars instead of discipline, in equity curves instead of emotional control. But true growth in trading and in life doesn't happen when you keep measuring your performance. It happens when you start mastering yourself. The habit of measuring is born from fear. We measure because we want certainty. We want to know if we're improving, if what we're doing is working, if we're moving closer to success. But mastery doesn't need validation. Mastery creates it. The moment you shift your focus from results to refinement, from performance to precision, everything changes. You begin to trade from a place of control, not comparison. Every new trader begins by watching numbers. They check their balance after every trade. They measure their worth by their profit and loss, and they let every fluctuation define their confidence. When they win, they feel unstoppable. When they lose, they question everything. That emotional pendulum is what keeps most traders stuck. But the traders who evolve, the ones who truly grow, learn to detach from the scoreboard. They understand that measurement is temporary, but mastery is permanent. Growth is not a line on a chart. It's a shift in your identity. It's when your reactions change, your emotions stabilize, and your process becomes instinctive. It's when the same mistake that once triggered you now teaches you. It's when you can experience a loss without losing focus, when you can win without becoming arrogant, when you can execute with precision regardless of outcome. That's mastery. The paradox is that mastery doesn't feel like progress at first. It feels repetitive, slow, sometimes even boring. Because it's not about chasing highs, it's about refining habits. You're not looking for excitement anymore. You're building emotional endurance. Growth happens when you no longer need the market to make you feel successful. When your satisfaction comes from execution, not from outcome, you've already started winning on a level most traders never reach. Measurement keeps you stuck in comparison. Mastery sets you free from it. When you measure, you're looking outward, at your balance, your peers, your performance metrics. When you master, you're looking inward, at your patience, your process, your state of mind. The shift from outer validation to inner calibration is the point where real evolution begins. You can't master something. You're constantly judging. Every time you measure yourself, you interrupt your flow. You start trading for the result instead of for the process. You begin making decisions based on fear of loss or need for validation rather than based on logic and probability. Growth happens when you stop asking, "How am I doing?" and start asking, "Am I aligned?" When you focus on mastery, small losses stop feeling like failures. They become feedback. A losing trade doesn't shake you because you know it's just part of the data. You're no longer trying to avoid losses. You're trying to execute perfectly within your risk. That's a fundamental shift in identity. It's the moment you transition from chasing outcomes to embodying consistency. Mastery is invisible to the eye, but undeniable in its effects. You can't always see it in the numbers right away, but you can feel it in your energy. You can sense it in the calmness of your decision-making, in your ability to stay present, in your resilience after setbacks. Growth isn't something you achieve, it's something you become. The trader who measures constantly operates from scarcity. They're always checking, always doubting, always seeking reassurance. But the trader who masters operates from abundance. They know that the results will come naturally from consistency. They don't need proof. They trust their process. And that trust compounds faster than any metric. When you stop measuring, your perspective widens. You stop zooming in on single trades and start seeing the entire journey as a continuum of development. You start valuing the lessons more than the numbers. You stop chasing the next win and start refining the quality of every action. That shift is subtle but powerful. It turns trading from a game of results into a practice of refinement. Most traders burn out not because the market is against them, but because their focus is misplaced. They measure progress by how much they make, not by how much they learn. But every professional understands that money is a lagging indicator of mastery. The skill comes first, the capital follows. When you master the behavior, the market rewards you automatically. Growth requires patience. And patience doesn't coexist with constant measurement. When you're always evaluating your progress, you're creating pressure. That pressure distorts perception. It leads to overtrading, to forcing setups, to needing every day to prove something. Mastery dissolves that tension. It allows you to perform from a state of calm detachment. You start to realize that consistency is not about control. It's about surrendering to the process fully. Mastery means you no longer chase perfection, you chase alignment. You no longer obsess over outcomes, you obsess over execution. You don't need every trade to work. You just need to work your edge perfectly every time. That's the kind of precision that separates those who survive from those who succeed. Growth also happens in silence. When you stop measuring, you give your subconscious room to integrate lessons naturally. You're not constantly judging or labeling your performance. You're allowing your brain to adapt, to evolve, to find rhythm and repetition. Over time, this creates a deep sense of ease. You stop fighting the market. You start flowing with it. Mastery is not about doing more, it's about doing less, better. It's removing the noise, the distractions, the need to prove. It's simplifying your process until what remains is pure clarity. The more you simplify, the faster you grow. The more you refine, the more confident you become. That's how mastery compounds, through simplicity. Growth happens when you start focusing on your internal metrics instead of external ones. Ask yourself, am I patient today? Did I execute my edge without hesitation? Did I manage my emotions when the market went against me? Did I stay disciplined when nothing was happening? These are the questions that matter, because mastery is not about what happens on the screen. It's about what happens in your mind. Measurement lives in the past, mastery lives in the present. When you're measuring, you're always thinking about what just happened or what might happen next. But when you're mastering, you're fully here, observing, acting, adjusting. The market rewards presence because presence allows precision, and precision is what builds consistency. There's a quiet power that comes when you stop trying to quantify everything. You begin to trust intuition again. Not emotional intuition, but refined intuition built from repetition and awareness. You no longer doubt yourself because you've trained yourself. You no longer need to measure success because you embody it. Every professional athlete, artist, or performer reaches a point where they stop counting practice hours and start perfecting expression. Trading is no different. You reach a level where your process becomes art. Every trade, every decision, every risk management choice becomes an expression of your internal clarity. That's when you realize mastery was never about the market. It was about mastering the self that interacts with it. Growth also demands emotional maturity. When you stop measuring, you stop punishing yourself for natural fluctuations. You stop assigning meaning to every loss or win. You realize that outcomes are temporary, but behavior is permanent. You stop taking losses personally and start treating them professionally. That maturity accelerates growth more than any technical strategy ever could. When you master your process, you stop reacting and start responding. You become deliberate. You stop trading from fear and start trading from flow. That's when small, consistent improvements begin to stack into massive long-term change, not because you're forcing it, but because you've aligned your internal rhythm with the market's rhythm. The most successful traders in the world don't talk about mastery. They embody it. Their calmness isn't a performance. It's the result of thousands of repetitions done with presence and patience. They're not measuring themselves against anyone. They're simply expressing who they've become through the market. And here's the paradox. When you stop measuring, your growth accelerates because your energy is no longer fragmented between judgment and performance. It's fully invested in improvement. You become sharper, clearer, faster, not because you're pushing harder, but because you're allowing learning to happen organically. Mastery is liberation. It frees you from the anxiety of needing to know, needing to prove, needing to compare. You operate with quiet confidence, knowing that every experience, good or bad, serves your evolution. That's when you realize growth was never about reaching somewhere. It was about becoming someone. When you stop measuring, you rediscover the joy of the process. Trading stops feeling like a battle and starts feeling like a dialogue. You become more creative, more intuitive, more resilient. You start making decisions not from fear of losing, but from the desire to execute beautifully. That's the space where mastery lives. The trader who stops measuring becomes dangerous, not because they're reckless, but because they're free from emotional attachment, from self-judgment, from the illusion of control. They operate from clarity, and clarity always outperforms calculation. Growth happens when you stop measuring and start mastering, because mastery is infinite. There's no limit to how aware, how disciplined, how calm you can become. There's no ceiling on focus, no boundary on refinement. The deeper you master yourself, the more effortlessly success follows. When you look back months or years later, you'll realize something profound. The moment you stopped measuring your progress was the moment you started accelerating it, because you stopped trading for outcomes and started trading for excellence. And excellence, unlike outcomes, compounds forever. So, stop measuring, stop keeping score, start refining, start aligning, start mastering, because the trader who no longer needs proof of progress has already achieved the kind of growth that can't be measured. It can only be lived. Growth, confidence, and consistency all converge into one truth. Mastery is the real profit. When you stop measuring every outcome and start mastering your responses, the market becomes your mirror, not your enemy. Your emotions settle. Your actions align, and success begins to flow effortlessly. The trader who stops chasing and starts refining no longer needs to prove anything because their results become inevitable. Mastery is not the end of the journey, it's the beginning of freedom.